Good morning, Banter fam. I hope you're having a lovely day. I'm your host, Miles, and right now we are looking at Bitcoin. Absolutely pumping. It ripped this morning after being quite quiet for a few days. We finally got a massive push to the upside, which is currently, from its lows of the range here, looking like a 7% move to the upside. Also lagging behind slightly at the moment, but the major question on everyone's mind right now is, can this rally sustain? Is this a temporary break of 20? So are we going to come back down and pull back into the range? Or are we going to keep powering forward? That's a question I'll be answering in today's video. We're also going to be going through the best stablecoin farm on the market, in my opinion, right now, or at least one that is offering some of the best returns. And we're also going to be doing a live Q&A at the end. So if you have a question to ask me, stick around to the end, and I'll be doing a live Q&A and answering your questions live on the show. So let's get straight into it. It's going to be a massive show. Smash the like button for being here, and yeah, let's get into it because there is a lot to talk about. The market is showing some movement right now after being stagnant for quite a few days. The first thing I want to do is do a wisdom of the day. I said the bull market has masked how far along the adoption curve we actually are, and quickly technological advancements are occurring. High prices create the illusion of progress. The truth is we're a lot earlier than we previously thought. And what I mean here is that prices are often confused for adoption. So people think just because we get higher prices across, many of the coins like we saw last bull run, that means that these coins are actually being adopted. Well, in my opinion, I actually think it's a bit of an illusion. And what really happens is prices are a reflection of sentiment and not necessarily a reflection of how the space is actually advancing. So I think last year we were kind of thrown into this situation where a lot of us were led to believe that the technology was advancing at a rate that was superior to its true growth, whereas we're a lot earlier than we previously thought. Now, this spells both opportunity and it also spells, something that's not so great because we're earlier. That means we are now getting opportunities. It means we're getting opportunities to accumulate at better levels. But at the same time, it also means that we were led to believe this kind of false reality of technological advancement, right? So although high prices create the illusion of progress, I think at the same time, it does spell that we're a lot earlier than we previously thought. And this is, something that we can take forward with us into the future because it means that we are going to see better opportunities in this market than we were last year. So we're early. So thank you all for being here. Smash the like button for being here today. Early in the morning. It's morning for me. That's why I still got my bathrobe on. And let's dive into some charts because the charts are showing some movement at the moment. Now, I want to go through what I'm seeing on the Bitcoin chart right now. I'm actually on the 30-minute chart at the moment to kind of track this movement. Now, yesterday, we were kind of getting this sideways channel, and you would have seen from Sheldon's live and Kyle's live, and even Trader SZ that went live on YouTube as well. They were all looking at this channel, and it was all eyes on this channel as to whether we were going to get a break to the upside or the downside. What actually happened this morning in the early hours of the morning in Australia is we got a massive break to the upside. Now, this break from the top of the range to its current level is currently a 2.2% move. Now, for Bitcoin, considering it's been so stagnant over the last few days, this is actually quite a big move. Now, will this sustain? Will this rally look like it's something that's going to be sustaining? Well, we do know that we have this major trend line in at the moment, and this trend line is showing us that we could potentially go higher, but at the same time, we are facing major resistance. So if we draw it in here, and we draw from these previous highs, and we draw to the current levels at the moment, we can see that we are currently facing this major trend. Now, if you want to take it from up here as well, that's probably going to be slightly more accurate, and that's going to tell us that we are approaching major resistance at the moment. So if we zoom in, we can see that, yes, we are in a downtrend because it's higher, low, higher, low, higher, low, but on the horizontal resistance, we've actually broken through. So if we zoom in, we can see that this is the key level that we now need to clear, and this is the level that we need to clear if you're a bull and you want higher prices. And it's this level at the, if you guys can see, the 20,287 level on the current 30-minute candle. This trend line is still the major resistance. Now, what could very well end up happening, and this would be the long setup, I think there's a lesser likelihood this happens, but I'll still give you the setup anyway. If we push through this major resistance here, we can retest, and then we can look for a breakout long. Now, this breakout long would mean that you would want to set your stop under the previous high, so somewhere in here. And this long would take us up to the 21,900 region, so almost the 22K mark. personally, that's not a long that I'm taking. I'm actually more interested in shorting this trend at the moment. So I'm more interested in the short because really the trend has been downwards for so long, and I don't really trust these pumps at this point. I guess you could say I have trust issues because the last few times we've gotten these major pumps, it has, ultimately led to nothing. So one other thing you could look at doing is shorting the trend. Getting into a short, but also setting your stop above the previous high, which I would probably put at 20,400. Obviously, you do have this major high here, but then you're just going to be losing too much capital on a stop. So, you don't want to be risking too much capital with your stop losses. I always recommend with stop losses to have them, usually tighter than 20%. If you're trading breakouts, you can have them around 10%. So if you put in, $1,000, you're not risking more than $100 of your capital. So that's really how I like to trade. So we are facing resistance at the moment. I'm going to keep you updated by the end of the show. And we're going to have a look at this resistance and see what has changed and see by the end of the show if there's a change in this. But at the moment, that's where we're sitting. But this breakout was the major lesson. The breakout was the major lesson because we had this range. We knew there was a range, and we knew that if we broke to the upside or the downside of this range, there was going to be a big move in either direction. Now, we actually did get it to the upside. So what I did this morning, it was quite early. It was like 7 a.m. I woke up, I saw the break of trend here, and I wanted to capitalize because I knew that we were showing some strength in the market. So I put in a long on this next retest. I think on ByBit, we did get a retest of this line, which was around the 19.7 mark. So I went onto ByBit and I opened a long. So I only put $1,000 in because it was early in the morning and I wasn't very fresh and I didn't want to risk too much capital, but I put $1,000 in, or $800 in, something like that. And I entered at 19.7, so I entered on this retest. And currently I'm sitting up $340. So this is something that I'm going to look at laddering out of. I'm probably going to start laddering out close to this line. I'll probably do it live on the show as well. And take some profits out. But overall, this was a fairly good trade. It was a 42% trade to the upside. So I'm pretty happy that I took the long here. But for the guys that didn't take the long, the lesson in here would be when you have horizontal resistance like this, and we get multiple retests and then we spring, that is a good long because in my opinion, it's quite good risk reward because yes, you're getting the upside on the break of trend, but then all you need to do is set your stop below the previous high or the previous low, which in my case was 19.5 because I set it here. So I set it just below this previous level, which meant that I was risking 20% of my capital. So in $1,000 trade, I was risking $200, but I got the upside of the potential break. So even though, we can come under, you may not hit the stop and then you're exposing yourself to the upside, which ended up being like a 3% move. So I did this with 20x leverage because when I trade Bitcoin, I use higher leverage because Bitcoin moves less than the alt. So when you're trading the alts, I wouldn't recommend 20x. I'd recommend personally, I do like 7 to 10x on the alts, but Bitcoin, since it shows so much, so much less volatility than the alts, you can afford to up your leverage a little bit. Hence why I did the 20x on ByBit. So we'll see how this goes. I'll keep you updated throughout the show. But that is what I'm currently seeing in the Bitcoin price with the resistance it's facing. Remember, if you do want to trade on ByBit, there's a link in the description, and that will give you a $4,200 bonus, up to a $4,200 bonus when you deposit. And if you sign up, we're also 10xing accounts live on the show. So ByBit's my favorite exchange personally, not even because we're sponsored by ByBit, just because I genuinely think the interface is the nicest and that's why I personally use it. If you want to sign up, there's a link in the description. Make sure to get involved. $4,200 bonus. I don't know how long that's going to last, but that is a pretty nice bonus for you guys if you do want to sign up and get involved. So link in the description for ByBit as well. Now, if we go a little more macro, because I want to go a little more macro on the charts just for a second before we get into the stablecoin strategy that I'm eager to show you guys, we can see that we are actually in this kind of downtrend consolidation. Now, Bitcoin right now is breaking a critical level, but what we can see if we zoom out to, let's say, the daily chart, just to make it even more obvious, what is happening is we're getting these dumps, then we're moving sideways. So we're in these accumulation phases and we kind of squeeze into these phases. Then we dump. So we had the break of trend. Then we accumulated as well in another sideways range. And then we had the dump again. So we broke through this level of support as well. And now we are back onto this trend line in this wedge. Now, if we did keep following the trend of these dumps, then we could expect to see, another dump down to the next region of support. Unfortunately, the next region of support is roughly 17.25.8. That's the lower level. And then if we broke that, we've got the even lower level as well to look at, which is 12 to 14. That's on a macro time frame. However, if we zoom in and we look at this wedge even more closely, we can see that we are starting to break out of the longer term trend at the moment. We can see there's a breakout. I personally don't like trading a breakout like this because it's on a larger time frame. And when I do look at the smaller time frame, like I was showing you before, in terms of like a short-term trade, we are seeing, we're still approaching resistance here. Now, the thing is, with taking a trade on the longer time frame, like this break of trend here, it's not a very strong trend because the overall dominance is still to the downside. The overall risk is still to the downside. So that's not really how I'm trading. I'm not really trying to trade breakouts like that in this market because that's just not really my strategy here at the moment. I'd much rather be shorting more than I'm longing, but I did take the long because I saw a clear break of horizontal structure, and that's why we're still up in this trade at the moment. Now 360, that keeps ticking along in the background of the show. All right, I want to show you, and we're going to get back to the charts later in the show, but while we let the charts kind of do their thing for a little bit, for the next 10 minutes, I want to talk about a stablecoin strategy that I like in this market, or at least is presenting an opportunity. Now, since the stablecoins have obviously, suffered a bit of scrutiny in the media recently and, across crypto Twitter for good reason, after the UST collapse that was offering 20% yield, obviously, a lot of people are now turning, a bit of a blind eye towards stablecoins. They're not very popular, or at least stablecoin farming isn't very popular. But there is one play that I'm doing with a small percentage of my portfolio that is still paying 20%. So this stablecoin strategy, it's still paying 20%. It's lower risk, in my opinion, than UST was because it's not an algo stablecoin. It's not void of risk, but I still want to talk about it because I think anytime you can get 20% on a stablecoin in this market is something that, we can't really ignore. So Thor did a thread here and he said USN version 2 is here. If you guys don't know what USN is it's a stablecoin on the Near protocol side. So it's a stablecoin where you can earn 20% on ref finance. So I'm going to run you through how to actually do this quickly, and also through the positives and the negatives. So with the recent collapse of UST, the risk appetite, as I alluded to before, has significantly decreased amongst investors. And the model for USN, so Near protocol actually released USN, and then they kind of realized that, the community sentiment wasn't in line with their goals. So they put a pause on it. And they released a new model called USN V2, which launched 2 days ago. And this new model, they made a lot of changes to make it more secure in this market. Obviously, because they didn't want to run the risk that UST ran or some of these other stablecoins ran. So what they're actually doing is they issued the stablecoin. V1 was collateralized with NEAR, which obviously means if NEAR had a massive dump, that could affect the backing of the USN itself. Now, the mint and redeem mechanism was between NEAR and USN. And this was to ensure over-collateralization with kind of a self-balancing reserve fund, right? So it wasn't like Luna, it wasn't an algo stablecoin, but they had a mint and redeeming mechanism based on NEAR. Now, what they decided to do instead was launch a new phase. So they kind of scrapped this, even though it was working. They kind of said, look, this is maybe a little more risky for most people's risk appetite in this market. So let's launch a new version. Now, the new version USN is different because it's one-to-one backed with Tether USDT. And the mint and redeem mechanism, instead of being between NEAR and USN, is now between USN and Tether. So you can redeem USN for Tether and Tether for USN and vice versa. So it's not over-collateralized, but it's backed one-to-one. And this was to improve the safety of the protocol because, obviously there was a lot of scrutiny after the UST thing, and they wanted to make sure things were safe. So USN has a nearly identical risk profile as simply holding USDT now in this market since it's one-to-one backed. And as phase one matures, as we can see, this is the phase one at the moment, which they're eventually going to roll into phase two as time goes on. As that matures, other stablecoins like USDC and DAI are likely to also back USN. So what NEAR wants to do is have multiple stablecoins backing USN and not just Tether. They want to have multiple stablecoins under phase two as well, which I think, will significantly increase its chances of success. So since it's one-to-one backed, obviously that reduces the risk of the token, unlike you get with these redeeming mechanisms. At least for from the algorithm stablecoin side, UST was an algo stable. This is now a collateralized stable. Very, very big difference. So anyone in the comments that says, it's a little bit dodgy, well, it's one-to-one backed now. A lot of people are also saying that Tether, Tether isn't to be trusted, etc. I think it's a very low likelihood that Tether goes down because personally, all you need to do is look at the reserves. Now, although they haven't been as open and transparent as we would have liked with the Tether reserves, not Terra reserves, we know that USDT is still a very safe stablecoin in the scheme of stablecoins. I don't think anything is going to happen to Tether in the short term. If it did, it'd be catastrophic for crypto. But look, although I'd like more transparency on that front, and I do prefer USDC in many ways, I don't think Tether's going anywhere. So I don't think having it one-to-one backed with Tether is necessarily a downfall, although we do know that it's going to get USDC and DAI backing in the future. So let's show you guys how to do this. Let's show you how to stake your USN, which is the new stablecoin backed by Tether, in the Near protocol universe. And I'll run you through step by step now how we're going to do this. As we can see, Bitcoin is just pumping a little bit in the background, 2233. I've got my eyes on it, guys. So in the Q&A at the end of the video, we can go through these charts a little bit to kind of get a little bit of an update after that. But in the meantime, let's show you how to actually stake USN V2. So this document, I highly recommend reading it. It's called Announcing USN V2. This is going to show you the challenges, what they're actually trying to solve. And then it's also going to show you the differences between phase 1, phase 2, and the original USD1, and how it's actually backed tangibly with USDT. So the way it's done is users can mint and redeem USN only with USDT. Until they introduce the other stables, right now they can only redeem with USDT. This means there's an on-chain arbitrage mechanism which remains intact, and that arbitrage transition is between NEAR and USN, USDT, and USN. And this arbitrage is basically how they keep a one-to-one peg. So it's not an algo stable, it's arbitrage based on the backing in the reserves. Now, there's a few places where this is conducted. Decentral Bank, Ref Finance, and Sender Wallet. But the easiest way to do this is using your NEAR wallet with Ref Finance. So just so we're clear, this is the stablecoin, USN. It's kept one-to-one peg so far. Did drop to 99 cents the other day, but it's only been out since May. So there's not a huge sample size, but we know how it works with its collateral and its backing being one-to-one with Tether. So what you will need, firstly, is a NEAR protocol wallet. So if you want to get a NEAR protocol wallet, and I'm quite bullish on NEAR, so I recommend at least having a little play around with, even if it's just with a couple dollars, having a play around, getting used to the ecosystem might be a smart thing to do for the future. It's called wallet.near.org. And once you have set up a wallet, obviously you just create your seed phrase, you'll get your wallet address in the top corner. This is one of my tester wallets that I've been using to have a bit of a play around. So once you've created a NEAR wallet, then you can go into Ref Finance. You connect to Ref Finance in the top corner, and you can come on. You'll probably be introduced to a swap page. If you click Farms, you will come to a farm page. And if you click on Live, you'll see all the live farms in the Ref Finance NEAR ecosystem. Now, the USN USDT farm is one that's paying 18%. That's 18% APR. So if you did compound back into stables, we know this APR is closer to 20%. So it's the same that Anchor was paying back in the day, but it is much safer than Anchor, objectively. So if you do want to stake in this pool, it is quite simple. So what you'll need is two things. You'll need USDT in your wallet, and you'll need USN in your wallet. Two things. So both stable coins, you'll both need them in your wallet. Now, we know USDT is EVM compatible, so it'll be on your MetaMask, but the wallet you're using now is actually a NEAR wallet. So what you'll need to do is you'll need to bridge USDT over to your NEAR wallet in order to transact. So as long as you have a NEAR wallet, I'll show you how to do this. You go into Rainbow Bridge. So it's a website called rainbowbridge.app/transfer. You connect your Ethereum wallet. We can see my Ethereum's connected here. You connect your NEAR wallet, and what you can do is click Begin New Transfer, and you can bridge across USDT across from Ethereum to NEAR. Now, if you have USDT on Binance, you'll need to bridge using the BNB bridge to Ethereum first. Similarly, if you had USDT on Phantom, you need to bridge on SpookySwap from Phantom to Ethereum first. But once your USDT is on Ethereum, you can transfer from Ethereum using the Rainbow bridge to Near protocol. We can see that you can do USDC, USDT. There's also a few other assets that you can transfer if you want to use it in the Near protocol ecosystem. That's the Rainbow Bridge. That's Near's native bridge to allow you to switch from ETH to Near. So once you've got USDT in your Near wallet, you can come into Ref Finance and click on Detail under the USN USDT farm. Now, what Detail is going to do is it's going to bring up a liquidity pool to allow you to deposit assets. So it'll allow you to deposit USN and USDT together. USN you can get through simply swapping on the market. So if we click Get USN, you can borrow against it to redeem USN, or simply you can come into the swap of Ref Finance, swap basically any asset, whether that be USDT, whether that be Near, whether that be obviously wrapped Near. You can get in the top corner by clicking this. That's how you get your Near to wrapped Near. You click on this icon next to your wallet and you swap Near for wrapped Near. Once you get wrapped Near, you can swap it for anything you want. So you can swap it for USN, you can swap USDT for USN. But the key here is obviously to create a liquidity pair, you need 50-50 in USDT and USN. So once you have 50-50 of both, getting your USDT either from the Rainbow Bridge or your Near wallet and getting your USN from your Near wallet, you can click on Detail, and then this will allow you to add liquidity and stake it to earn the 18% per year on stablecoins. We know USN is backed by USDT, so there's no inherent risk at this point of holding USDT alongside USN because they are backed by the same asset. If USDT collapsed, then both would collapse inevitably. As I said, I think the chances of that happening are extremely, extremely slim, but it's exposure to the same asset essentially, just with a little bit of added risk on the USN side, hence why we get a higher APR, because you assume slightly more risk and you get a slightly higher reward, which is why I'm only doing a small percentage of my stablecoins in this farm. Let's say, I had $1,000 worth of stables. I wouldn't put all $1,000 in Ref Finance. I'd probably put let's say max 200. So I'm still ticking away, making a little bit of spare income on the side, but I'm not exposing myself to too much risk. So what you want to do is add USN from your wallet and USDT for your wallet and click Add Liquidity. Once you click Add Liquidity, this will give you a liquidity pair. Once you've got that, you can just come in and click Stake, and that liquidity pair will show up in this portal here. Once you stake it, you earn your 18%, and then you can redeem those rewards. You'll get it in the Ref Finance token. If you click on your farms, this is how you redeem rewards. You click Claim, and when you claim rewards, you'll receive it in Ref Finance tokens and Near tokens, and you can just simply swap them on Ref Finance under the swap portal here. And you can swap them for any asset you want, whether you want to get USDT, put it back into stables, what you can compound back into the farm by following the steps outlined previously in the video. It's completely up to you, but I thought I'd show you this stablecoin strategy because 20% on stables in this market is not something to laugh at, because we know how much the yield has dried up across DeFi. We know that it's very hard to achieve 20% now after the anchor occurrence went down. We know that it's very hard to achieve even 5%. Because a lot of DeFi protocols with emissions drying up are now in a situation where they have to offer lower APRs because there's not as many deposits coming in, which obviously means less revenue to divvy up. Emissions curves are dropping because a lot of these protocols specified, a time horizon where they'd emit, and now that's drying up. There's not many places to earn yield. So whenever we can earn 20% on a stablecoin, it's not something I'm going to turn a blind eye to because I know just how valuable that is in this market. Just quickly, last point before we get back onto the charts. We know that you on Borrow Cash, so app.borrow.cash, you can use this app in order to stake assets. USN, you can earn 14.65%. You're earning the Borrow token instead of the Ref token. But this is a 14.47% APY instead of a 20% APY. That's another option. Personally, I'd just go for the original one, but that's another option. And you can also deposit assets and borrow against them. Under the Borrow tab on Borrow, you can, let's say, deposit USN and borrow assets against it. So that's another nice little app if you want to borrow and lend for USN as well. But I'm going to get into a Q&A now because I want to hang out with you guys for a little bit, answer your questions. And yeah, just hang out with you guys, talk through the market, talk through the charts at the moment. We can see Bitcoin is pushing up a little bit. So you'll see my trade just filled. So I just hit my take profit, which is why it's not active anymore. I'll show you my position. It was here. My closed P&L was 413. And my closed P&L was 413 because we hit this line. And I set my take profit on this line because I didn't want to be too greedy. So I set my TP right here. And it just hit, and we could see we bounced off this line just then. So I hit my TP. Now, this potentially is a short setup for anyone that wants to get the retest. Obviously, we would want another green candle into this, another rejection, and that would be the retest. Or if we broke trend and you could potentially look to long, I'm not longing because that's just not my interest in the market right now. As I said, I want to follow the general trend, which is to the downside. The reason I took that other long, as not to be, as not to counter what I just said, I took the other long because it was a very clear break of trend on a horizontal. Multiple retests. I got it on the third retest and I said, look, this is just too strong to ignore. I'm going to long and then I'm going to short into, or at least sell, which is technically the same as shorting, into resistance here, which we're getting. So I just took profits on that. That was a $450 trade, just a small trade. Just, a little bit of profit to keep things ticking over a little bit. And yeah, that's a nice trade, but I'm going to keep my eye on this as I answer some questions. Everyone, let's do some questions. Leave questions in the comments and I'm going to answer them. All right, let's go through. Appreciate your DeFi insight. Thank you very much, Matthew. You said, can you address the KuCoin FUD? I addressed it yesterday on the show, but I'll talk about it again. I did a tweet and I made a warning. In my opinion, I would much rather come out and warn you guys, even if it's just rumors, because the thing is, even if it's only a 5% chance of something occurring, I'd much rather get out in front of it and warn you guys. The worst case that we'll have is maybe you withdraw your funds and you waste 2 minutes of your time and then you end up depositing them back the next day. The worst case is I waste 2 minutes of your time. The best case is I save you from losing all your money. So for me as a creator, it's although yes, it was spreading rumors, it's better risk reward to actually, when you see smoke, not to play with fire. And in crypto, when there's a little bit of smoke, I personally go risk off. Now, could I have worded it a little bit better? Probably. I probably could have said, well, I actually did say in my follow-up, don't panic. This is just a rumor. I specified multiple times it was just a rumor. So I think I did my best from that front to clear things up. But in terms of not spreading rumors, I do agree we shouldn't spread FUD in crypto, but I was just keeping my community updated. And since then, KuCoin came out and made a statement, and it looks as if those issues aren't going to come to fruition, but we never really know in crypto. This is why you should, in most cases, this isn't KuCoin specific, but in most cases, you should keep your funds off exchanges. Now, I do trade on ByBit, obviously, but that is a trade. That is for trading. I'm not keeping stacks of cash. I'm not keeping my Bitcoin sitting in ByBit. I'm using this to trade in and out of the market, and then I'm withdrawing and taking profits into my ledger and onto my MetaMask wallet. So this is what I'm doing with my trading. So it's the exact same with KuCoin. Like, you can still trade there 100%. I still trade on KuCoin, but in terms of keeping assets in an exchange, I'm not necessarily looking to do that. That's not KuCoin exclusive. That's, reflective of all exchanges at the moment. So I just wanted to make that clear and kind of address that a little bit. Appreciate you shared that tweet. Yeah, I mean, I just want to keep you guys updated. Whether it's wrong or it's right, I'd much rather be right most of the time. I wouldn't say I'm necessarily right or wrong in this situation because all I said was risk reward, right? It's probably safer to take it out than keep it in. But yeah, I just want to keep you guys updated, Elizabeth. If you do want to keep updated, my Twitter is at Miles Deutscher, link in the description if you want to come along and follow me. And yeah, I keep you guys updated on that. When are you covering Moonwell DeFi on Moonbeam? This is really something that I want to cover because I do like Moonbeam. It's just a lot of these strategies are a little bit riskier. So if you guys want some degen strategies, I can give them. I would say the risk appetite in this market, not just for my audience, but for myself, it's a lot lower. I'm looking more towards things like stable farming and safe single staked asset farming because that's the safer way to do things at the moment. But if you do want a couple strategies, because I know a lot of you own Moonbeam, Moonriver, I could definitely do that. Always safer to pull out. Yeah, exactly. Usually it's safer to pull out of these situations rather than trying to risk. As I said, worst case, like you risk 2 minutes of your time, and best case, you're going to save thousands of dollars. So it's like good risk reward in my opinion. That's simply why I did the tweet. Good job skipping my question. What's your question next posed? I'm not trying to skip. I don't skip anything. There's a lot of questions, so just re-ask, bro, and I'll answer it. Miles, do you think the pump won't last? Well, I'm looking at my macro charts at the moment, and I see a clear downtrend. Now, as long as there's a clear downtrend, we know we're approaching the 50 EMA, the 100 EMA. We know these are key levels. I won't long into these levels until we get a clear break of trend, and this horizontal is another clear level that we need to break. Now, we did hover in this range for quite a while. So if we do break through, like we are seeing at the moment, it would be no shock to me that if we just assumed a higher range here and started ranging in this 21.4 range instead of the, previous smaller, tighter range from 18.5 to 20K that we were seeing before. That wouldn't surprise me if we re-entered this range, which is why this breaker trend is massive. So on the retest here, if you guys are itching for longs, itching for longs, you can look at a long on support here. So if we come down, bounce on this, and then retest, that is potentially a long setup that you can look to take us to 21.5. That is just one of the longs you can take. Obviously, you'd want to set your stop below the previous level, which is, this isn't the most secure level to be bidding at, in my opinion, but roughly 19,700 on the retest there. And we can see that on the diagonal, we are getting a rejection right now. So that's not really a long setup you want to take until we have a clear retest. And by the time that we look to break out, this diagonal will be further along, which means we will be getting a breakout of this coinciding with the horizontal structure. So retest, and then we want to see some green. Probably what will happen is that'll look like this. That'll look like this. Retest. Because that's the same level, the 20K level, then it will look to break up. On the break of trend, you can catch the second retest, and then you push. So you're getting two retests. You're getting the retest on the horizontal, and then you're getting another retest on the diagonal. Now, this is just how I like to trade. You may trade differently, but that's 2 confluence points. So I'm getting 2 confluence points to trade. I'm not just going off a whim off a singular break of trend. That's just how I like to trade Bitcoin. Now, I think a lot of us beachheads saying I missed the long. Yes, I do think you've missed this long, which was the long that I took that I showed live on the show earlier. What I don't think you've missed is a bigger long if we break trend. If we do what I just said a minute ago, that could occur. I think there is room here to push up to this key level. And this level is the previous high at 21,000. This previous high would take us up to 21,000. It's not the highest return in the world, but in this market, considering we're getting much smaller returns, we got to take these percentages. You have to take your 2, your 3% and just bank it. This isn't the market where we're going to get these crazy moves, guys. I'm not going to lie to you. Like, we're not going to get these 20% trades. We're not going to get these 30% trades that we were getting previously. What we're going to get are these smaller little tidbits. You guys saw just before, I made $500 on live on the show from a 3% move on 20x leverage. A 3% move is how I made $600. So you don't need massive moves to make money in this market. You just need good entries, and you just need to be patient with your entries. You don't need massive 20% swings like in the bull market to make money here. All you need to do is hit that 2-3% and keep the dollars ticking over in your account. Tom, I want to address this. You said you're a pro trader. No, absolutely not. I don't claim to be a pro trader. You guys know that have been watching me for a long time, that I am more of a DeFi guy. I'm a fundamentalist. I do my best work when I'm digging deep into DeFi, researching projects, researching for those next gems that I want to share with you guys live on the show, researching, those projects that I think can 100x. That is my strength. Researching ecosystems, on-chain analysis. I'm a fundamentalist first and foremost. I'm not a pro trader. However, I am doing a lot more trading, and trading is where a lot of my time is now going, because I do want to improve the skill in the meantime, because I want to keep dollars ticking along. And I've been very clear about this. I trade with a small percentage of my portfolio. I trade with a small percentage, probably 5 to 10% or less. My trades aren't massive. Maybe 1,000 for a small trade, maybe a few thousand for a big trade. That might be a lot to you. For me, that's quite a small percentage. And that's just what I'm comfortable trading with. And I'm going to do it live on the show because I want this show to be a reflection of my journey. And I want to share, what I'm doing live on the show with you guys, because I want to be transparent and show you exactly what I'm doing at any given moment. Because, as a content creator, that's the most authentic thing I can do. And trading's one of the things I'm doing. And I do believe it's giving good opportunities to make money in the market. So why would I just ignore it and stick to DeFi? When I can do a bit of both, give you guys my stablecoin strategy like I did today, help you guys out in that respect, and then at the same time also help you guys with trade setups. It's like a win-win, right? We both benefit from that. So not a professional trader, but I'm not claiming to be. Remember, if you do want to sign up to trade, there is a link in the description for a ByBit account. I highly recommend signing up. because we've got a $4,200 bonus if you sign up. And then we also 10x accounts live on the show. So we basically give out free money on these ByBit links. We basically give out free money. So if you do want to sign up, it's a no-brainer. I see a lot of people saying I'm from Canada, I'm from the US. No one would ever tell you to open a VPN. No one would ever tell you to do that. That's a terrible idea to use a VPN. Terrible idea. Yeah, but I'll keep answering some questions in the meantime. What's so good about NIA? Great question. This is something I've done videos on. So if you guys want to see the video, I think it's on the, if you go into Crypto Banter, you can scroll down and it's called Miles Show. And on Miles Show, I don't know. It's one of the shows on the playlist. You can look at it. And that's where I go into NIA in more depth. But if you guys want the quick TLDR, I like it because it's got the VC backing. I like it because it has a huge ecosystem development fund, $850 million. A former top engineer at Google is heading the team. But we know how important VC backing is in crypto, and we're starting to see the signs of the ecosystem pick up a little bit. So if we look on DeFi Llama, we can see that NIA protocol is now one of the top chains for TVL. Only 300 million, but compared to the rest of the market, it has held up quite well. And we know that with USN, this is going to drive adoption. Now, it's one I'm accumulating. It's one I'm DCAing into. I'm not going crazy yet. But when I do look at L1s with upside at a $2.5 billion market cap, compared to some of these others with $20, $30 billion caps, I do think NIA is one of the best risk-reward bets. That's why I like it. And that's why I like it's got very low fees. So I like doing DeFi on it. This guy said you get all your money from referrals. Not true. We do obviously have referral links, like is in the description. That's a referral link. That means we get a kickback of trading volume. Of course, be 100% transparent about that. That is how we make money. That is one way that we fund the channel. We have a massive research team. We have resources, like huge resources, huge overheads. And one of the ways that we pay for those overheads and support the channel is through ref links. And I see no problem with that. People that get angry at influencers for shilling, quote unquote, shilling ref links, I don't agree with that at all, because that is how we monetize. YouTube ad revenue is basically negligible. It's almost nothing. So that's how we monetize, and that's how we, pay for cost of creation and also earn money ourselves. And in the meantime, you guys get massive kickbacks. We literally give away like thousands of dollars every single day, and you get thousands of dollars when you sign up. So we give you money for giving us money in trading fees. So it's like a win-win. We both make money. And that's why I see absolutely no problem with trading links, because you're going to trade anyway. So you may as well support us, and we may as well support you from giving you money worth the sign-up bonuses and money live on the show. So, hey, it helps both of us. So there's absolutely no problem with trading links, right? Near buy, just long 20x. Look, in this market, it's something I'm DCAing into. It is one I'm trading a little bit. In fact, if we want to trade NIA a little bit, I don't know if I have my trade setups for NIA, but I can have a look. Yeah, this is one that's also breaking its horizontal, similar to Bitcoin. We look at this previous level. That is the horizontal line. We can see it is broken above. If you want to look for the retest in the long, if that has confluence with the Bitcoin chart that I was just showing you, then that is potentially a long setup. But it's this range, this similar range we saw to Bitcoin that we're breaking out of. Very similar range. If you want to draw it to 3-1, you can. Personally, there's more touch points on the 3-2 zone, and we're in a much similar range to Bitcoin as well. So basically, you want to be charting Bitcoin in this market, and the alts tend to follow. Where is Rand? Busy suing people on Twitter. No, I don't know what he's doing. I think he's asleep. It's like 1 a.m. in Cape Town. He goes live at 4 p.m. Cape Town time, which is 10 a.m. EST. I go live at 7 p.m. EST every day. So yeah, true, but it's built into your business plan. I mean, sure it is, but we're helping you guys out. You're helping us out. First and foremost, we want to make this community profitable. My goal is to help you guys make as much money as possible. I want to make as much money as possible in this market through trading and investing as well. So we're both on the same team here. I want to help. And ByBit's one way that we keep the funds ticking over in the meantime. But we want to become the most profitable community in crypto. We've been very clear on that vision from the beginning. And that's something that I want to strive to do. And I want to, help you guys out with that as well. And that's what we're going to be doing every single day here on the show. Every single day on the show. Could you chart DOT? I can chart DOT. However, it will just look like everything else. It just looks like everything else. It's the exact same setup as NIA. It's in that range. It's the exact same setup as NIA. Bitcoin, we're getting the breakout. We do of the long-term trend, of the short-term trend. Where's my chart here? We are still getting rejected. And this is the trend I'm looking at more closely here. This is the trend I'm looking at more closely. Still rejected. They make complete sense, Hydro. Now, this depends how you trade. This completely depends how you trade, Hydro. Because certain traders have different skills. I am much better on horizontals than I am breakouts. And I trade to my strengths. So I knew that once we were consolidating in this range, that once we had tested the top horizontal multiple times, then that would be a good position for a long. And that's exactly why I took the long there. It makes complete sense. It's a previous area of support and resistance. We always want to trade support and resistance. We can see 1, 2, 3 touches here in the past, another touch here. We can see 1, almost 2, 3, 4, 5, and then on the third retest, then I long. I mean, if that makes no sense to you, I don't know what will. I don't know what will. What did you do before Banter? I actually had my own channel. So what I did is, it was actually locked down in Australia. So for quite a long time, we were locked down due to the pandemic. And basically all I had to do was crypto. I got into crypto like late 2018, 2019, did well off my bear market purchases. And then 2020 during lockdown when DeFi really started to kick off, because if you guys remember, there was no DeFi in like 2019. So when DeFi really started to kick off in 2020, and really started to come to fruition, and we saw Aave and Maker and Compound starting to launch, that's when I really got my hands dirty with DeFi. So that's how I started, really getting into it. So I had, about a year and a half of like basically daily intense training under my belt. And then I started my own YouTube channel like a year later, probably a bit late in hindsight. I don't know why I didn't start my own channel at the start of the bull run. Would have been better from a growth perspective, but I started way later in like September, October. And I started my Twitter earlier, like in July. And then Banter picked me up because I was writing articles, DeFi articles for Banter. They picked me up. And then, they said basically come make content on the channel. You can keep your own channel, but, come and join the Banter channel, join the Banter fam. And basically got poached. #1 draft pick. Jokes, I'm kidding. Hustle was #1 draft pick. Hydro, you're the meanest commenter ever. You're saying you never wash your hair. I just got out of the shower. It's still wet. So I always stream in the morning, always after my shower. Do you have any 100x projects? I do have 100x projects. Now probably isn't the time for me to call them. I can give you a little watch list. A lot of the gaming projects I think could have 100x, for example. And there's some DeFi projects I think can 100x. But I'm going to do a video on this in the future. I don't necessarily think now's the time to be aping in. Some of the safer ones that still have upside, like UOS, I think are good plays. Vulcan Forge on the gaming side. Some of these smaller L1s, very, very risky, but potentially like a Moonbeam, Moon River, they can do well because I believe in the DOT ecosystem. Ref Finance, it's like a $1 million project that I showed you guys today is DeFi. That has a very low market cap. That could potentially do well. But once again, I'm not DCAing into these because they're very risky in this market. Very, very, very risky. Miles, do you like stochastic RSI? Absolutely. I love using stochastics. Right now, we look overbought on the 30-minute. The thing is, the stochastic is reflective of the time zone you're using. So on the 1 hourly, we're ticking to the upside. On the 4 hourly, we should start to be coming down a bit. Well, we're still at its peak. So everything is kind of indicating us being overbought. Apart from the daily, if we look on the daily, then we can see that, we're hovering in the middle range here. But on the shorter term timeframes, which obviously is what most of us are trading on right now, we kind of look overbought. Kind of why I'm hesitant to long the breakout. So we would need, a clear retest for me to do that. Kind of why I'm more interested in shorts at the moment, to be completely honest with you guys. To be completely honest, more looking at the shorts here. That's why I sold, and that's why I closed my long. I didn't want to keep the long going. Independence Day pump. Yeah, the US is They're awake. It's like nighttime for them, huh? Alrighty. I'm going to head off. It was great to answer your questions. The show format, I'm going to keep similar every day now. So I'm going to start with trading. I'm actually going to start with my words of wisdom. So a tweet of interest, then trading, then DeFi or a market update, and then a Q&A at the end. So the show is going to be a lot longer, but also a lot more information packed than ever before. So that'll be the structure of the shows. We're going to cover a little bit of everything to help you guys on the market. I loved hanging out with you guys today. Shared quite a few things, shared my stablecoin strategy, some trades. Very, very fun hanging out with you guys. So thank you guys so much for joining. Make sure you smash the like button and subscribe if you're not subscribed, obviously. Notification bell as well if you want to stay up to date with these streams. But yeah, smash the likes, show some love. Thank you all very much for joining. Thanks, Bobby. Thanks, Philip. Thanks, Elizabeth. Thanks, Scott. Thanks, Satoshi, David, everyone. Thank you guys for hanging out with me. I will see you in the next one. Peace out.